Forget everything you think you know about cryptocurrency. Forget the price charts, the memes, and the lose everything quick stories. Today, we're talking about something far more important: how crypto has fundamentally altered the relationship between humans and money in most ways people don't even realize. Welcome to the SwapSpace channel. By the end of this video, you'll understand why crypto isn't just another investment, but the biggest shift in monetary technology since the invention of banking itself. Now, for centuries, moving money meant asking permission. Want to send $500 to your family in another country? That'll be $30 in fees, 3 business days, and a dozen forms to fill out. Want to start a business but don't have credit history? Sorry, no bank account for you. Crypto didn't just create new money. It eliminated the middleman entirely. Today, a farmer in Kenya can receive payment from a customer in Germany instantly, with fees measured in cents, not dollars. No bank approval needed, no credit checks, no business hours. The psychological impact is even more profound. For the first time in modern history, individuals have complete control over their money. You don't need permission to store it, spend it, or send it anywhere in the world. That's not just convenient, it's revolutionary. Here's a statistic that should shock you. 1.4 billion adults worldwide don't have access to basic banking services. Not because they don't want them, but because traditional banks won't serve them. Too poor, too remote, and too risky. Crypto changed that overnight. In El Salvador, where 70% of the population was unbanked, Bitcoin adoption gave millions of people their first access to digital financial services. In Nigeria, where inflation destroys savings and currency controls limit international trade, crypto became a lifeline for preserving wealth and conducting business. But the real revolution isn't happening in the headlines. It's happening in everyday transactions. Street vendors in Lagos accepting Bitcoin payments, freelancers in the Philippines earning in crypto to avoid devastating remittance fees, and students in Venezuela using stablecoins to protect their savings from hyperinflation. And these aren't tech enthusiasts or investors. These are regular people using crypto as money because it works better than their local alternatives. They're not buying crypto to get rich, they're using it to survive and thrive in broken financial systems. Traditional finance moves at the speed of bureaucracy. Wire transfers take days, international payments require multiple intermediaries, even instant digital payments often take 24 to 48 hours to actually settle. Crypto operates at the speed of the internet. A Bitcoin transaction confirms in minutes. Ethereum transfers happen in seconds. Layer 2 solutions process thousands of transactions per second with near zero fees. But speed isn't just about convenience, it's about economic opportunity. When a small business can receive payments instantly instead of waiting days for checks to clear, it improves cash flow and reduces risk. And when workers can be paid immediately instead of waiting for payroll cycles, it provides financial flexibility that was impossible before.
Well, because I just got paid!
Here's where crypto gets really interesting. It's not just digital money, it's programmable money. Smart contracts can automatically execute complex financial agreements without human intervention. Insurance claims that pay out automatically when flight delays are detected, loan agreements that adjust interest rates based on real-time market conditions, and investment funds that rebalance portfolios according to predetermined rules. And this programmability eliminates human error, reduces costs, and enables financial services that were previously impossible. Decentralized finance protocols now manage over $100 billion in assets, providing banking services without banks, insurance without insurance companies, and trading without traditional exchanges. The implications are staggering. Every financial service you've ever used, lending, borrowing, trading, insurance, or even savings, can now be automated, made more efficient, and offered globally without traditional gatekeepers. Now let's be honest about crypto's impact on personal wealth. It has created more millionaires faster than any asset class in history. Early Bitcoin adopters who bought at $100 and held to $60,000 saw 600x returns. Ethereum investors who got in early experienced similar gains. But crypto has also destroyed more wealth more quickly than almost anything else. The 2022 bear market wiped out over $2 trillion in crypto market value. Millions of people lost their life savings chasing quick gains or falling for obvious scams.
Face it, we got scammed.
And this extreme volatility isn't a bug, it's a feature of a new asset class finding its true value. The key insight here is that crypto wealth creation isn't random. The people who built lasting wealth understood the technology, invested what they couldn't afford to lose, and had the patience to hold through multiple boom-bust cycles. And the people who lost everything were usually chasing quick gains without understanding what they were buying. Now, cash has been humanity's go-to money for thousands of years. It's private, instantly transferable, and works without electricity or the internet. But cash has fatal flaws in the digital age. Cash can't be sent electronically. It's vulnerable to theft and loss. It degrades over time through inflation, and most importantly, cash is increasingly being pushed out by governments who want to track every transaction. Crypto preserves the best features of cash: privacy, instant transfers, no intermediaries, while adding digital capabilities. You can send crypto anywhere in the world instantly. It can't be counterfeited, and many currencies have fixed supplies that protect against inflation. But crypto also has weaknesses cash doesn't have. It requires technical knowledge to use safely. It's volatile in value, and it also depends on internet connectivity and electrical power. More importantly, if you lose your private keys, your money is gone forever with no way to recover it.
Are you serious? Deadly serious!
Now, to learn more about not losing your crypto, check out the video we made on how to protect your assets. Click the link above. Digital banking promised to modernize money, but it just digitized the same old system. Your bank account is still controlled by your bank. International transfers still take days and cost significant fees. Your transactions are still monitored and can be blocked at any time.
Remember, we're monitoring you.
Crypto rebuilt the financial system from the ground up. Instead of digitizing banks, it eliminated the need for them. Instead of making old systems faster, it created entirely new systems that operate 24/7 globally. The advantages are clear: lower fees, faster settlements, global accessibility, and user control. But the disadvantages are real too: higher complexity, regulatory uncertainty, and the responsibility of being your own bank. Now, the reality is that crypto isn't replacing traditional finance. It's creating an alternative that coexists alongside it. Some people use crypto as their primary financial system. Others use it for specific use cases where it works better than traditional alternatives. And most people use both systems depending on their needs. Now, here's something you can use regardless of your financial preference: the SwapSpace channel giveaway. You can win $20 just from watching this video. To enter, like the video, comment what you think is the promise of crypto, and subscribe to our channel. Good luck. What we're witnessing isn't the end of traditional finance. It's the beginning of financial choice. For the first time in history, people can choose between multiple monetary systems based on their needs, values, and circumstances. If you value privacy and control, crypto offers options that traditional banking can't match. If your value is stability and consumer protection, traditional banking still has advantages. Crypto hasn't changed finance. It has permanently altered the relationship between individuals and money. Now, this doesn't mean crypto will replace everything overnight. Change happens gradually, then suddenly. We're still in the gradual phase, where crypto coexists with traditional finance and serves specific use cases where it excels. But the foundation has been laid out for a more open, accessible, and efficient financial system. And the question isn't whether crypto will change the world. It already has. The question is how quickly the rest of the world will adapt to this new reality. Because ready or not, the future of money is already here. Like and comment if you enjoyed this video, and subscribe for more.